If you want to make any money investing in stocks, then I would personally stay away from Tesla stock. Here is why. So Tesla as a business, since it was founded in 2003, has been paving the way for electrification in cars and now more recently trucks. And its stock is possibly the most popular stock in the American market, possibly even the world at the moment. Just have a look at what the stock price has done over the last 6 months. It's crazy. Now there's a very famous quote by Warren Buffett that I really like that says, in the short term, the stock market is a popularity contest. Now there's a second half to that quote, and it's the reason why I'm staying far away from Tesla stock, and I think you should do the same. Hey guys, my name is Ricardo Torres, founder of Escaping to Freedom, where I teach people like you how to get more freedom in your life through investing in stocks. So if you are interested in that and you want more life, more investing gains into your portfolio, then please consider subscribing to my channel. I release videos like this every single week. But this video in particular is going to be a little bit different to my other videos. I normally focus on more robust companies, and today I'm going to focus on Tesla stock. Now I don't want to waste your time, so let's get straight into what's happened with Tesla, why it's going so crazy, and why its stock price has surged so dramatically. Okay, so this is what happened with Tesla stock over the last few weeks, and especially over the last few days. Take a look at the stock price of Tesla, right? So if we zoom out by 6 months, this is what's happened to Tesla stock. It's pretty crazy. Before the pandemic, it was trading, it actually experienced a really rapid rise in price to the point where it was priced at around $900. Then the pandemic happened and it went all the way down to somewhere around $360 per share. But then as the American stock market seemed to be recovering, the stock price climbed back up to around 700, 800, 900. It was around $1,000. But then over the last few days or the last couple of weeks, the stock price has gone from around $1,000 to $1,500. It even reached peaks of $1,700. At least that's its 52-week high, which is crazy. That meteoric rise is not normal in a stock. It doesn't normally happen because the company is doing anything good. More on this later though. So basically, from the bottom of the pandemic on the 18th of March 2020 to right now, that is a 328% rise, or $1,184 increase per share. That is ridiculous and absolutely crazy. Now, there's several reasons why this has happened. Now, the main two reasons that I want to focus on are the fact that Tesla is going all out on Tesla's semi-freight truck, and also the fact that people really seem to want to go out there and buy Tesla's products. Now take a look at this graph by a website called Likefolio that they basically measure purchase intent mentions in social media. That's basically people saying, hey, I will really like to buy a Tesla Model Y, okay? If someone mentions that, that's got some keywords that suggest purchase intent. That is what they measure. Now, obviously, this doesn't necessarily translate to sales, okay? It really doesn't. Just because someone says they're gonna buy something does not mean they're actually going to go out there and do it. Now, there's another reason why the stock price is going so crazy. Because there is the belief that Tesla might actually enter the S&P 500 index. Now, if you don't know what that is, it is simply the 500 top companies in the American stock market grouped into one. It's an index that performs really well. An awful lot of people own the S&P 500 index. In fact, I actually recommend that for most people, they should just go out there and buy an index fund such as the S&P 500. Now, what happens when a company gets included in that index is that an awful lot of fund managers will have to buy that stock because it's been included in that index. Now, there's a video by Graham Stephan that I'm going to link in the description where he goes a lot deeper into why this happens. But in that video, Graham actually mentions a study that was done on the inclusion of companies in an index, or at least in the S&P 500 index. And what that study found is that there was a price surge when a company was announced that it would join the S&P 500 index. Once a company actually gets included in the index, the stock price seems to go down to some sort of baseline level. So why am I even bothering to make this video? Everything seems good in terms of Tesla. People seem to really want to go out there and buy Tesla. It might get added to the S&P 500. Its price might get to ridiculous highs, right? Everything looks rosy for Tesla. Then why not buy Tesla? Why not just enter this and ride the wave that everyone seems to want to be riding? Now, the reason that I will not personally be doing that, the reason I don't own Tesla, the reason why I don't plan to buy shares in Tesla anytime soon, I love to own it one day. I really believe that what they're doing is great, but the reason I am not entering Tesla right now is as follows. If you've watched any of my videos, you will know that I am a long-term investor and I'm also a value investor, which means that I always want to get a good deal when I buy stocks. That often means either selling or just not buying when everyone is out there buying, like what's happening right now with Tesla stock. And on the contrary, when everyone is really bearish on a company, when people simply do not like a company, the stock price is going down, that is when I often buy a stock. And in my opinion, what makes it so difficult to be a long-term investor, to be a value investor with Tesla stock is this. It's the fact that Tesla is not really that profitable. In fact, take a look at this graph of the last few quarters and what Tesla's earnings per share have done. Quarter 2, 2019, it was a loss. Quarter 3, 2019, it was a gain. Okay, the last 3 quarters have actually been a gain. But if we go further back, if we have a look at the last, 2-3 years of Tesla stock, or at least Tesla company, what they have done, how much money have they actually made, you can quickly see that the majority of numbers are negative. Negative EPS, negative EPS, negative EPS. Now, obviously, it's a growth company, okay? It's not really at the point where it's going to be making money. Now, the company does make revenue, okay? It does sell cars and it sells more cars this year than the year before. Have a look at the company's revenues. They have been steadily increasing year after year. In 2015, it made an awful lot less money than it made in 2019, for example. So people look at this, people say, oh man, everyone's buying Teslas. Everyone wants a Tesla. They're selling more cars every day. But that doesn't put money in your pocket as an investor. Now, one thing's revenue and one thing is earnings, okay? The actual profits that the company makes. If a company is not making profits, you are not profiting as an investor. Now, I'm now going to play a very short clip of Warren Buffett talking about this just a couple of years ago.
I look to the business to determine whether I've made a good investment. And I'm concerned about, whether we have new competition, how we do over the years. But it's the business I look at. When you're just looking at the price of something, you're not investing. I mean, if you buy something, Bitcoin, for example, or some cryptocurrency, you're not looking to the asset itself to produce anything. If you buy a whole business, you're looking at how the business does. If you buy a part of a business, why shouldn't you look at how the business is going to do?
Now, just like Warren, I don't care about the stock price of a company because I know that as long as the business makes money, as long as the business puts money in your pocket, that is what really matters. And in the long run, the stock price will follow suit for the vast majority of companies, as long as they are robust, strong companies that will be there for decades to come. Now, what's actually happening with Tesla stock is the complete opposite. People look at the stock price alone. From what I'm seeing in all these groups that I'm in and all these YouTube comments that I see, and again, let me know what you think of Tesla in the comments below. I would be really interested to hear your thoughts on it. But from what I see, people just see the stock price going up and they say, wow, it's gone up in the past, therefore it will continue to go up, therefore I'm gonna buy and I'm gonna be rich in 5 months time, okay? That is not the way things work. And yeah, sure, maybe Tesla stock will keep growing up, but over the long run, this is simply not sustainable. Now, at the beginning of the video, I mentioned the quote, again, by Warren Buffett, the greatest investor of all time, in my opinion. But I only gave you the first half of the quote. Now I'm going to give you the full quote because this is very relevant to Tesla stock at the moment. So the full quote goes like this. In the short term, the market is a popularity contest. In the long term, it is a weighing machine. What that means is that popularity comes and goes. It comes fast, it can often leave fast. Tesla stock is very popular right now. its popularity might go out the window in a few months' time. Elon Musk might make another really controversial tweet and the stock price will plummet, okay? What really matters and the weighing machine that it talks about is the company's ability to make money and to make more money every year than they made the previous year. That is what really matters in the long term. If you take anything away from this video, it is this. Invest in companies that are going to put money in your pocket. And let's look at the data. At the moment, Tesla stock is putting very little money in their investors' pockets. They also don't pay a dividend, which is fair enough. It's still in the growth stage of a company. They definitely should not pay a dividend. But a company that pays dividends, that's money that goes straight into your pocket. Money that you can actually use to pay the bills or to reinvest in buying more stocks, right? Tesla doesn't give any of that to their investors at the moment. And that is why I am not investing in Tesla at the moment. And I really don't think you should either. Now, you might argue that the future is very bright for Tesla. And I actually agree. I think that, demand for electric cars will keep increasing. Tesla's products are very appealing. People love their products, even though they're not the greatest quality, people still love them. And perhaps one day I will buy a Tesla car. I don't really know. But for now, in 2020, this is pure speculation. Nobody knows what's going to happen with Tesla. There's just too many variables up in the air, okay? It's not like a company, like a Coca-Cola company, for example, that over the long run, it's going to grow fairly slowly, but it's a really good business. It's going to make you more money every single year. I simply cannot say the same thing about Tesla stock. At the moment, Tesla is simply a promising company that has barely made any profits, that is being priced as an extremely fast-growing tech stock. It simply isn't that. And in fact, it's a car stock, okay? It's a car company, and I have personally worked in the car industry. It's an industry where it's very difficult to make money consistently. Look at what's happened to Ford recently, right? It's also a very cyclical industry. It's very hard to, 1 year make money and to replicate that the next year because there are cycles. And then you have the quality of the cars. Take a look at this graph, okay? I used to work for Jaguar Land Rover. I was an engineer there. And, I'm pretty sad to see the Land Rover is right here at the bottom, right? These are brand rankings, and this measures problems per 100 vehicles. Tesla is right at the bottom. Tesla simply does not make great cars. Maybe one day it will. Hopefully one day they will recruit the best engineers, they'll have more experience, and they will make better cars. But at the moment, they don't. So, maybe 1 year they'll have to recall an awful lot of cars, and that will affect the company's bottom line, okay? There are simply too many variables to consider. So when I actually see that analysts are forecasting, really rapid growth in earnings per share, okay? They reckon that there's gonna be a loss in 2020, that's fair enough. There's all these things going on in the world right now. But they reckon that from 2021 to 2023, the company will dramatically increase its earnings per share to the point that in 2023, they reckon that the earnings per share are going to be around $21 per share. Now, granted, only 2 analysts are actually making these estimations, but for the sake of argument, let's run with those estimations, okay? Let's say that we're at the point where Tesla is actually generating $21 per share per year. At the current price that Tesla is trading at, which is $1,500 per share, that is a PE ratio, or a price to earnings ratio, of 71. That is really high. I normally like to look at a PE ratio below 20. Preferably 15 or even lower, right? That's value investing in action. I don't like to overpay for a stock. Now, if earnings continue to grow, and that is a really big if, because there's way too many variables, if they continue to grow, and by 2023, they get to $21 per share, if we then use a more reasonable price to earnings ratio of 20 to 25, something like that, still pretty high, but again, at least it's reasonable. It's not 71, or it's not hundreds or something, right? Which is what it is at the moment. If we make those assumptions, that means that by 2023, I would perhaps consider Tesla stock in the $400, $500 price range. Now, I don't see Tesla getting into that price range anytime soon. People are loving the stock too much. A lot would have to go wrong in people's perception of Tesla for the price to go down. So yeah, if that happens, if time passes and Tesla proves that it can actually generate money for its shareholders, that's what I really care about, then yeah, I will consider buying Tesla stock. But it's not at that point yet. At the moment, it is purely speculation. You're really gambling that certain things will happen. The demand in electric cars is going to increase, that it's going to be added into the S&P 500 index, that everything's going to be smooth sailing. You're already factoring those things in. So in my opinion, if you're going to buy Tesla stock at the moment, at the current levels, this is definitely more like, you know, investing in cryptocurrency back in 2017 when everybody was doing it. This is fear of missing out. It's a cognitive bias that, you know, you don't want to miss out on those gains. You don't want to have all your friends, you know, peer pressuring you into buying a stock and then be the only one out of your peers that didn't buy stock and, you know, made a really big profit, right? That is the fear of missing out, and it leads people to make bad investing decisions. So that is why I'm not going to buy Tesla. I don't think you should buy Tesla. Obviously, do what you will. I'm not a financial advisor. This is purely for entertainment purposes only, right? Don't take my word for anything. Do your own research. But if you actually want to invest, if you want to invest in solid companies that will give you double-digit returns, or at least should give you double-digit returns in the long term, then I suggest you consider investing in the Dividend Kings. I'm going to put a link here to a playlist that I've been doing recently. I'm going to release a video on every single one of the 28 Dividend Kings, at least in 2020. So check that out if you actually want stocks that are way more likely to make your money grow, because they actually put money in their investors' pockets through dividends and also through earnings per share growth, none of which are present in Tesla stock at the moment, okay? So this was a little bit more of a controversial video. I really hope you've enjoyed it. Give this video a like if you have enjoyed it, and consider subscribing for more investing weekly videos. Also, let me know in the comments below. I'm sure some people will be maybe offended by my view on Tesla stock. I know it's a very loved stock, you know, in the YouTube community. Let me know what you think in the comments though. I'd love to start a conversation about Tesla stock. That would be really cool. But yeah guys, that is it. I will see you in the next video. Take care.